Morning and welcome, Patriot Radio News Hour. Joe and a shoulder of Jason on this Tuesday. I hope it finds you well out there. Yes, UConn wins the national championship, dominating. I loved their strategy. We're going to Purdue. They have this big guy, and he's 7'4". And they just decided, hey, you can score as much as you want. Nobody else is going to be able to do anything. And back-to-back national championships for UConn. So that was here in the Valley of the Sun. So I guess it was a pretty big deal. 73,000 people. I don't get it. I really don't. You could barely see the court. They were showing like the worst ticket. The court looked like a speck, as you're in the very back rows. But I guess if you're a fan, I don't even know what that ticket would cost. Hundreds and hundreds, maybe even $1,000. Now I'd rather just sit and watch it on my couch. But what do I know? 800-951-0592. That is our toll-free number. Of course, the website allamericangold.com. Am I going to say it again? Yes, I am. A new all-time record high in gold once again. Silver rallying again. Copper was on the move. And tomorrow we get CPI. Are we going to see $2,400 this week? I'm going to say this. I think the probabilities are very high that we are going to see that. But we'll have to wait and see. They're hoping. Think about this. They want the month over month to be up only 0.3. Yeah, that's it. That'll be a good number. Of course, I did go to public school, but I can do a little math. That would put inflation at 3.6%. So almost double what they want it to be. And, of course, if it's 0.4, you can, right, okay, well, all of a sudden that's 4.8%. And then you need to double it to actually get the real number. But, that's what they're hoping for. I think they're going to get that number. And I think they're going to try to make it look good. The Dow losing some steam here. Bad news. Of course, it's Boeing, all the problems that they've been having. Deliveries dropping due to all the safety concerns out there. Janet Yellen wrapping up her trip to China. It just did not get received very well. There was inside, I'm not there, we weren't there, but speculation that the reason for the trip has to do, she was talking, China's overproducing. Yes, they're producing too many solar panels and too many electric cars, and they're doing it cheaper than we can do it. How dare they? And people were speculating that the real issue was the consumption of these primary metals, copper, silver. By the way, silver, $28 this morning. I mean, silver's already ignored 26, ignored 27. We get a close above 28. Just telling you, we may go right to 30. So be on the lookout. But people were speculating that the real issue that the United States was having is the consumption of all of these, what we'll call the green energy materials, because the cost of electric vehicles is going to go through the roof, especially here in the United States, when you sit there and say, well, wait a minute. Look at copper right now. almost $4.50. It's just insanity. And that she wants China to produce less. And China basically came out after she left and said, yeah, whatever, we're not doing any of that. Of course, we threatened all the sanctions and all this tariffs and you name it. But if J.P. Morgan, we're going to talk about Jamie Dimon's comments, but they were out in another note to clients that they are considerably worried about the fact that commodity prices are nowhere close to reaching the top. The United States is not out of the woods in inflation and stay overweight commodities. And I think that's really a smart play here. I don't think we're out of the woods on inflation. I know Jason doesn't think that we're out of the woods on inflation. And I think it just tells when they're talking about, hey, we're going to consider 3/10 good news. I think they would consider 4/10 good news. We would probably have to be somewhere close to 5 for that to be considered bad news. But it is interesting because, the reason for the visit may not been really what they were, trying to convince us that it was going to be. And China, well, what did they do today? Well, they had the Russians in today. That was, I guess, all you need to know about what they felt about Janet Yellen's visit. So we're going to watch all of this play out. Again, it's another record high in gold. We've been as high as 23, let's call it 23.65. If we close anywhere close to that and inflation comes in where they expect, could we see $2,400 by tomorrow? Patriot Radio News Hour will be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Tuesday. A quick look in at the markets right now. The Dow is down, approaching 300 points. The S&P's down 26. The Nasdaq's down 58. The 10-year note off the highs here, 437. Like I said, they want to celebrate anything, I guess below double what the inflation rate should be. I guess they're going to like it. Crude oil's off 80 cents, so crude oil's come off. Mostly because we haven't heard a response from Iran. Word is, hey, how about this? Word is that we've told Iran, hey, maybe we'll do something for you, right? If you don't strike back. Gold right now up $16, 23.47 and rising. Silver's up 20 cents. 80, not yet 80. That's a little, hey, that may be next year, $80 silver. $28 on silver right now. And again, we talk about being diversified. Right now, it's funny because Jason and I were talking this morning, and we've seen this huge run in gold, and it's a really, you know what? I say it's huge. It really isn't. The markets are telling us something. But a lot of people out there, well, it's not that bad yet, right? People are still out there. I mean, look at 73,000 people were, at the Cardinals Stadium where they couldn't even see people play. Just to be there, right? Things aren't that bad. The fear isn't here yet. The fear is coming. That's the problem. And what gold, silver, copper, what all these other things are telling you is this is going to be the biggest one yet. And you need to take action now before it gets here. And I think, you know what? This time next year, I think we're going to be looking at a much uglier economy and an uglier situation in the United States. I hope I'm wrong, but I don't think so. Check out why refi, because you get up to 10.25% fixed rate of return. It's not correlated to the stock market. It's not correlated to the Fed. Well, what happens about, well, what if this happens? What if that happens? It doesn't matter what ifs. The what ifs don't matter because it's fixed. You get the same return every single month. Some people use it as income, right? Some people just compound it. You can do whatever you choose. There's no fees. They never attack principal if you need your money back. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. But Jason was having some technical difficulties. Well, we got you back. But, we were talking about, a gold, another all-time record high, silver charging again. But I don't think most people get this is just the beginning. And a lot of people, were accustomed to seeing gold and silver kind of rally when people are nervous, right? People get scared, the banking crisis, COVID lockdowns, right? Things like that, we're used to it. This is something where we're seeing this big move because the fear is underneath the markets, and people don't realize it, they don't see it. And here's the real issue. When the fear comes, the big players know there's no inventory out there. So we're calling this, hey, this is a big move. We could see a really oversized move when the fear gets here because they're going to realize, holy crap. I think that's why Janet Yellen was in China. Hey, stop buying all this stuff. Right? Leave some for everybody else, Jason.
And the premiums aren't bad yet. On top of everything, the premiums are low still. So let's face it, it costs more now. We've been yelling at you guys to buy it. Now it does cost you more. However, waiting around for the dip or waiting around for whatever, it's going to get more expensive. This is not where it stops. It's going to keep on going. So don't be a deer in the headlights. The bright, shiny flash of gold is right in your face, telling you to buy it and buy it now. Don't sit there and think, well, I missed it. Oh, it's already gone up. Joe and I don't have the ultimate crystal ball of exactly what it's going to do. Nobody does. But what gold is telling us is, as a leading indicator of inflation, we could be looking at prices of things later this year and into next year going up in a tremendous way. And it's always good to be a prepper. Hey, I could fill up my pantry. I can buy extra this, and I can buy extra that. It's always good to do that when you know inflation's coming. But you know what? There's certain things that spoil. You can't have 100 heads of lettuce to make salads forever, right? It goes bad, right? You buy gold for that. A lot of people, they understand it, but they kind of don't understand it, right, Joe? The way you buy heads of lettuce and have it preserved for a long time, you put it in gold, because the gold will stay up with the heads of lettuce price. And you can store all the heads of lettuce you want in one gold coin pretty much, right? And so if you need to prepare for the inflation that's coming, you prepare for inflation with gold and silver. The price is not too high to prepare you for the inflation that's coming. It's just not. You're going to just get this stuff ahead of time before it moves again. Because, Joe, it just seems to me that gold at some point will level off, maybe in the next week or two. And then I really believe the same thing we just went through, I think it's possible it'll happen again in June. $300, $400 now. It's very, very possible another $200, $300, $400 in June. I feel like the quarterly, in 2024, quarterly, we're going to start seeing some rises. Because there's reasons that the central banks and all these big players are buying so much of it. And here's the thing, Joe, the fact that you don't have the fear that you were talking about, it's because they don't want you to be afraid, because they don't want you to buy it. They don't. If you're worried about the big guys creating pressure on your life and making things more expensive and taking away your freedoms and all this stuff, they don't want you to buy this now. They want you to completely miss out when things really move, Joe.
They have no idea. This is what is underneath the bright, shiny, headlines that the Federal Reserve and the cheerleading channels want you to believe is something very, very ugly. How about small business? Now, small business, it's 44% of the economic activity in America. The rest of it's big business and then government, right? Government's probably the most. And they just had their survey again. Optimism is the worst since 2012. Think about, you would have thought it had to be COVID, right? And maybe that's the outlier. No, it's not. They actually took out the small business COVID lows, if you can believe that or not. The small business optimism at the lowest, 25% of business owners. Inflation is still the worst day-to-day thing in their operations, and increased costs for inputs and labor. The owners continue to manage all kinds of economic headwinds. But Jason, this is a big indicator. We keep talking about, hey, when this thing breaks here, and even the Fed's own data, and this is the part, Phoenix Capital Research is the one that put it together, that the Fed, which they try to use the PCE, which is a terrible predictor of future inflation, but they're saying the Fed has figured out, right, well, if you don't count this and you don't count that, then that way we can make things look better. But the St. Louis Fed has been gathering all kinds of information that they've been sharing with the Federal Reserve banks, that in their own data now, inflation appears like it's going to have this second wave that's about to hit the United States, and yet they're still all out there talking about rate cuts.
Yeah, I think it's still possible those rate cuts are actually going to happen, and it's.
I think they will. I think they will, because it's going to get that bad. Yeah, there's no doubt.
Wouldn't just staying where they're at be at least a sensible thing to do? Let's just leave them where they're at. But I think, Joe, they have to keep one side of this puzzle happy. So I think, they want to get exuberance in the markets, and a quarter point in June or a quarter point in the next meeting would probably do it. And then we'll just have to watch and see if inflation just grips really hard at that point. But you've been saying it for a couple of years, Joe. We've both been saying it, but they're just two bad decisions. They're trying to walk a tightrope, and I don't think there's a way that they can get the other side without falling off.
Yeah, and Jamie Dimon was talking about the unsettling landscape, talking about regional bank turmoil. As a matter of fact, Lynette Zhang, she's telling everybody no bank is safe. No bank is safe, and she's probably, here's the sad part, is she's probably closer to right than anybody else out there. These markets continuing to expect a soft landing, Jamie Dimon said. It's important to note the economy is fueled by a large amount of government deficit and spending and past stimulus. There's a growing need for increased spending, right? We keep talking about that. Restructuring global supply chains, boosting military expenditures, and battling rising health costs. This may lead to much higher inflation and higher rates than anyone is expected. Furthermore, there are downside risks to watch. When you think about what he just said, think about all the spending he just talked about. Green energy. We need spending on green energy. We need spending on the military. We need help with medical care costs, right? We need already, without that stuff, look how much we're spending. Jason, it just seems like the government is in spend, and no amount of, really, I guess, no amount of Fed talk is going to talk this inflation down when you're still spending this kind of money.
Yeah, this is the situation that they've been in for a while, and there's no way out of it. Joe, how many times have we spoken it? And with gold running like the way it's running, I mean, look at the price rises in gold, and now silver above 28. It sure gives a great alternative to all this nonsense, Joe. It just really is what you've been saying for decades now. What a place to put your money to avoid all the nonsense that you keep bringing to the air day after day, week after week, month after month, year after year. It's just, you got to put your funds that you've worked so hard for to put it in a safe place. If you want to invest in somewhere, that's great. Joe gives you plenty of places to invest your money. There's lots of things you can figure out on your own. If you want to risk some of your money and put it in an investment, great. Study up, get it done. But where are you going to put it while you're waiting? Sometimes it takes a while to find that investment, right, Joe, that works for you. Sometimes it takes a while, and what are you going to do? Just have your money being eaten up by inflation year after year after year after year, especially with the inflation we've had now. It's time to put it away. You got to put it in something a lot safer than a digital money account that has a number that doesn't reflect the value, Joe.
Patriot Radio News Hour. We'll be back. 800-951-0592. Joe and Jason here on this Tuesday. We're watching, record high gold prices, silver staying right up with it here as it continues, at its highest levels in several years. It doesn't look like there's going to be any let up here. India silver imports. By the way, India now the largest silver consumer in the world. Surged 260% in February. A new all-time record high. Higher demand in India, the world's, like I said, biggest silver consumer. Okay, so on the consumer side, they are the largest. Talking about a huge increase in prices, India has imported a record 2,295 metric tons of silver in February. They imported 637 metric tons in January. And here's what's shocking. Last year, India, for the whole year, imported 3,625 metric tons. And when you sit there and think about it, in the first 2 months of this year, they've already imported 2,932. India is expected, according to their ministry, Jason, they're going to import more than 6,000 tons of silver in 2024, almost double the amount of silver that they imported in 2023. And when we look at what is supporting these prices, what is supporting the silver price, the gold price, because here in America, they're like, well, the ETFs aren't doing anything. It's all physical demand. This is real demand, not the paper stuff. This is real demand coming out of primarily the Asian areas, coming out primarily with these BRIC nations. But these numbers, Jason, they're just hard to really get your mind around. They're so much bigger than what they had been doing in the past.
Right, and this rise in the gold and silver prices is going along with the commodity drive. It's not just a silver and gold rally. It's a commodity rally. And Joe was talking this morning to me, that Janet Yellen is in China, and most likely she's telling China to stop buying this stuff, right? Just on the last segment, we were talking about, if you want to stockpile on things that spoil, like food, you buy gold and silver, and that's how you stockpile, because the gold will go up with other commodities, which can be food, but copper and iron and all this other stuff, I'm sure China's just gobbling it up, Joe, and it's pushing the prices on commodities. Now what happens if the commodities smooth out and the world is still in a worse place, war or any other kind of thing going on, right, Joe? Another election crisis, and suddenly gold and silver goes from that commodity rise in prices, and suddenly there's a gold and silver, there's a gold and silver demand that pushes past the commodities. You can have gold and silver in a very high place. Joe, we don't talk a lot about how gold and silver can just blast off and just go bananas. It's definitely possible. We just don't talk about it. We try to be reasonable, but we're seeing things now that it's very possible. Price demand on gold and silver could shoot off like a rocket ship, and you don't buy for 3, 4, 5, 6, 8 months of 2024, and suddenly you're paying 2 or 3 times the amount. It's insane to say that we're selling gold at the prices we are, but this is what the market demands, Joe.
Well, interesting story just coming across here. Goldman and American Express. Now they're both banks now, big ones too. They're in the too big to fail category. Are now cutting rates on their accounts, their savings accounts, their money market accounts. And I'm going back to Lynette Zhang, and Lynette Zhang was doing an interview the other day talking about, hey, none of these banks are safe here. One of the ways, a big way for banks to save money, Jason, is to start lowering what they're paying you to have money in their institutions. And it's kind of shocking when you think about a 10-year note is at the highest we've seen all year. And these banks are cutting, essentially cutting the savings rates to their clients. I don't know here, but that's not something that we would normally see. You don't see banks doing that. They wait for the Fed to cut their rates, and then they start lowering. This one kind of says, something else may be happening here.
Something else, Joe, right. And I'm a little distracted today with the rough start, but I mean, I just watching gold move the way it's moving, Joe, it is shocking. I mean, the people that listen to the show every day, this has got to be shocking. Joe's never shocked, but Joe's even shocked by the price demand of gold. It's reacting to the world around us. Joe, gold's never really gone up in value. It just reacts to the world around it. The fiat currency and the inflation it's just gold doing what it's supposed to do.
Is this a message to the central banks? I think it is. I think what Goldman, American Express, and other banks are saying, you have to cut rates. That's just me. That's my interpretation of this, because why do this right now? That doesn't make sense, right? That's going to anger a lot of your account holders, saying, well, how are you lowering my rate when the 10-year note's at the highest level of the year? This is a message. I think this is something where, again, underneath the surface, and the things that we don't see, we're one bad situation away from a very ugly market. That's just my opinion here. The Fed has to be perfect. And Jason, let's face it, these guys, if they were a baseball player, right, they'd be batting below 200, right? They'd be one of these, the Mendoza line well above it. They'd be like, yeah, get this guy out of here. Send him down to AAA because this guy can't hit. I mean, that's really what I see here. And it's interesting because if that's right, if this is right, now all of a sudden, all of this explosion in the gold and silver price starts to make a lot more sense, doesn't it? That these bigger banks are saying, dude, we've got a problem here. Patriot Radio News Hour. We'll be back after the break. 1-800-951-0592. Joe and Jason, Patriot Radio News Hour on this Tuesday. Inflation data coming tomorrow. Another day, another record. Silver, we're looking for a close above 28. By the way, March silvers almost got to $30. March of next year silver already. I think if we close above 28, don't be surprised if we go right to 30. Today, here's what we got: two really good specials for you, especially if you want to amass fractional gold and silver. 1/10 ounce American Gold Eagles. We are the cheapest going. 1 through 49, $295. I went out and looked at all the supposed cheap online guys. They're $320. You'll see as low as $315. Yeah, if you buy 500 of them, right? That'd be 10 rolls of 10th ounce to get to that price, right? But they're all $320, $325. I saw $335, $295. If you buy a roll of 50 or more, you want to buy 10 rolls, you can. They're $290. Well above the guys out on the online guys out there. Then on silver, I've got 3 cases of Silver Eagles. After the 3rd case, I can get more, but it's going to be 2 weeks before delivery. And I'm going to say right now, the silver from 25 to 28, that wasn't the move. I think when silver breaks above 30, we could be in that situation where you may go extended period of times where there is no silver to be bought. But again, right down here with all the big $720 a roll. You don't have to buy 1,500 to get that price. $720 a roll for Silver Eagles. That's $20 off. You want to buy a case, 25 rolls, the Green Monster box, $7.15. Save another $5. 17,875. So, Jason, a great way to go with gold and with the 10th ounce American Gold Eagles, well below everybody else. And then the U.S. Silver Eagles, like I said, I got 3 cases we can get out pretty quick. After that, figure about 2 weeks, 800-951-0592. And when we think about, wow, what's going on with silver? Is silver going to follow gold? Just look at India. I think that tells you all you need to know about what's going on with demand. And silver, as we've talked about, Jason, it doesn't have all the inventory above ground that it used to.
Yeah, how many years have they had shortfalls now, in production of silver? It's short. They're not making enough. They're not mining enough. They're not pulling enough out. And it's not as recyclable as gold is, so it's less there also. Silver isn't the type of metal that gold is. You can't just if you sat there long enough, rubbed a piece of silver between your fingers, eventually it would turn to air, right? You can't do that with gold, but you can do that with silver. So silver demand and silver manipulation, the paper silver, is much worse than gold. And when silver starts to move, and it is moving now, it could have tremendous moves. And Joe, as I was telling you this morning, there is some indications that if it were to settle above $28 an ounce for several days or maybe a week, there's a good chance that it just blasts into the 30 range and towards the 40 range very quickly. And as the silver price goes up, I mean, what do you do if you're the head of some country, the head of some investment, anywhere in the world, and you see silver moving like that, and you're going to want to put a position in? It just makes buying more and more and more, and that's what's going on with the gold and silver price, Joe. I think half of what this gold rally is that, entities that were waiting have decided, it looks like we can't wait anymore. Our budget for this is not infinite, so we got to take our position now, and it just pushes the price. And we could be seeing this with all commodities for a while, Joe.
Yeah, when we sit here and we think about the gold to silver ratio, right now it's at about 84.5, which is off the highs, right? It's off the highs. But to what Jason's talking about, $28 is kind of this big area here where all the computers, everybody's going to start jumping in here just to get to 65. If gold didn't move from here, stayed at, 23.50, you're talking $36 silver. So I think, Jason, that's what people are talking about. Hey, just to get to 36, that doesn't even put silver in any type of overvalued situation, right? That doesn't, a lot of people think, oh my gosh, well, the gold to silver ratio would be like 30 to 1. That'd be incredible. No. So there's a big gap in that silver and gold market, and people are saying that this is going to be the year now that gap gets back here. So, a potential $8 to $10 move, because let's face it, silver goes to 36. Gold's not saying, we're probably going to see gold closer to $2,500. And so, a $10 move in gold, if it closes above 28, bringing it to 38 in a very short period of time. And Jason, I've been telling you, we warned you about March. Look what happened. Jason's always got his feelers out there and talking about, hey, there's going to be another move before the election in the gold and silver markets where, hey, all of a sudden we're going to see another time period where all of a sudden, hey, what happened to 2,600 and 2,700, right? What happened to $34 silver, 35, 36? It just goes right through all of those. Jump in here. Silver Eagle, $7.20 a roll. Case or more, down to $7.15 a roll. 10th ounce gold Eagles, $2.95, 50 or more, $2.90 at 800-951-0592. Jason and I will be right back to wrap it up. 800-951-0592, the final segment here on this Tuesday. Pretty quiet phone lines. I think that's that's my indicator, right? Yeah, we're probably going to see higher prices tomorrow because of it. Rolls of U.S. Silver Eagles, $720. You're going to save $20. That's $1 an ounce you're going to save today. If you buy a case, save another $5 a roll at $715 or $17,875. And then the 1/10 ounce American Gold Eagles. I told you, listen, it wasn't going to be below $300, and it's not, except here. Jason and I were out there looking at these prices out there, anywhere from $325 to $335. Someplace if you buy 500, you can get it for like $315. 1 through 49, $295. If you buy 50 or more, $290 at 800-951-0592. And Jason, I think all eyes will be on the, let's call it what it is, another fake inflation number, but interesting moves coming from the big banks here, because once one of them does it, usually what we see is the rest of them following suit, cutting the savings rate that they've been paying customers. And is this an indication, Jason, that the banks are trying to send a message to the Fed, hey, we don't care what inflation is. We're running low on cash flow. Yep. You better lower the rates.
Yeah, that's what I think we're seeing, Joe. I think that's why you said lowering the rates is probable. I think that's probable too. But it's funny because weren't they talking 8 rate declines back in December or November? What was it? They were saying
6,
8,
6, yeah.
6.
Some guy had 6.
So now they're saying 3, and that's iffy at best. So I think they have a couple of token quarter point rate reductions, maybe just one. And then if the inflation comes roaring back, they can say we tried. By that time the election will be over with, and who knows what what other news item is to be pointed at for all the chaos coming. But yeah, they'll probably do. I don't know if they'll. Do you think they'll do it in June? I don't know if they'll do it in June, but it's going to be, I think, at least one before the election.
Yeah, I don't know. Again, things are. When you're watching what's playing out here behind the scenes, it's hard to know really what's happening, and I think that's been something where, depending on the fragility of the banks and the markets, I think it's probably, this is just my opinion, one major market meltdown, right? And all of a sudden, the Dow's at 36 or 35,000. I think that would be enough to probably spur the Fed to start cutting rates. And I think this is why a lot of people are saying there's going to be this second move in gold and silver later this year, right? This is it. I think that's it right there.
So if you do a quarter-point rate reduction in June, then what I'm saying is could eventually happen just based off the rate reduction. Gold can just go another $100, $200, $300, just like that.
800-951-0592. Jason and I, we're going to be right back with the Half Empty Cup.